Thank you semuanya. Jadi seperti yang tadi Jody juga sudah jelaskan, untuk sesi pertama ini, what I'm gonna share adalah tentang fundraising landscape dan juga zooming in ke angel investment. Jadi sebelum kita bicara tentang angel investor itu apa, mungkin aku butuh sedikit scoping dulu dan konteks sebenarnya itu secara umum capital provider yang mungkin teman-teman nanti bisa explore itu siapa aja. Nah, nanti salah satunya pasti juga akan dijelaskan lebih lanjut oleh Marcel dan juga Natashia, karena konteksnya akan beda-beda juga gitu. So, thank you. Just quickly, tadi Judy juga sudah intro bahwa my background sebelumnya ada di financial services, mostly ngeliatin perusahaan TBK dan korporasi, dan kemudian I switch my head into this SMEs and startups. Memang tidak hanya ngeliatin impact-driven startups atau social enterprises, tapi juga startup secara umum. Nah, mungkin saya juga ada beberapa learning dari my previous experience saat di Sydney, sempat join di salah satu education tech startup, dan juga clean energy startup. Jadi mungkin di sini bisnisnya jadi juga dapat bayangan lebih real lah gitu ya secara operasional. Dan tadi seperti yang Jody juga sudah jelaskan, this year I got this opportunity to meet with the other cohorts dari AVPN. So this is actually a good learning for me as well when I connect with the other impact investors yang ada di Asia Pacific. So maybe later we can discuss a bit about my learning there. Nah, sebelum masuk tentang materi, sebenarnya I'd like to share a bit about ANGIN, karena seringkali juga ada sedikit misunderstanding about what we're doing. Nah, memang secara singkatan, ANGIN adalah Angel Investment Network Indonesia, but actually we're not only a network. Jadi, sebenarnya kalau ANGIN sendiri, secara kami ada dua divisi besar. Jadi mungkin kalau teman-teman terekspos sama tim kami dari ANGIN, dan proyeknya juga tipe proyeknya bukan investment, jadi mungkin itu dari ANGIN Advisory. Nah, jadi memang ANGIN awalnya itu sebagai Angel Investment Network, kami berangkat sebagai Women Fund. Jadi di tahun 2014 itu ada 10-15 women leaders pooling money, dan ANGIN manage untuk invest dana tersebut ke women entrepreneurs. Jadi dulu memang fokusnya adalah she-to-she investment. Nah, seiring kami grow, we grow as an angel investor network. Jadi kami invite more angel investors, individuals di jejaring ANGIN, dan kemudian ANGIN berperan sebagai deal flow provider gitu. Jadi kami analisis startup dan companies yang cocok dengan angel investor di ANGIN. Nah, seiring kami bertumbuh di tahun-tahun ini, network kami tidak hanya angel investor. Jadi tidak hanya individu, tapi juga ada beberapa institusi yang juga masuk di early stage investment. Jadi yang funding size-nya juga ternyata bisa sekecil 50.000 USD gitu. Nah, dengan diverse profile of these investors, kami pun juga makin belajar berbagai macam point of view dalam melihat early stage investment. Ini sedikit konteks aja dari apa yang sudah kami lakukan di tahun 2020. Nah, jadi just to be clear, di sini kan ada 10 investment yang dieksekusi oleh ANGIN. Nah, ini bukan ANGIN yang invest, jadi ANGIN bukan venture capital. Kami bukan investor, kami bukan fund. What we're doing adalah intermediary. Jadi kami memfasilitasi proses investment yang dilakukan oleh investor dalam jaringan ANGIN. Baik itu angel investor maupun institutional investor. Jadi uangnya bukan dari ANGIN dan decision investment bukan dari ANGIN. Di satu sisi, tadi saya bilang ada ANGIN Advisory. Kalau ANGIN Advisory fokusnya adalah program capacity building, research, dan lain-lain. Nah, salah satu proyek terbaru ANGIN Advisory yang nanti mungkin teman-teman bisa akses adalah report terkait investing in impact di Indonesia. Nah, di sini ada beberapa nama-nama impact investor dan kemudian tren supply dan demand di impact investment di Indonesia seperti apa. Jadi ada linknya nanti saya share juga di sini, mungkin di luar ini weekend bisa baca-baca juga gitu ya, untuk memahami konteks impact investment di Indonesia. Nah, ini tadi saya sudah jelaskan bahwa posisi angin di tengah, jadi penekanannya adalah we're not the investor. Dan siapa sih sebenarnya tipe-tipe entrepreneur yang akhirnya angin execute proses investasinya. Jadi memang karena angin mostly terdiri dari angel investor, size dari deal-nya sendiri cukup kecil, jadi mungkin 250.000 ke bawah. Jadi rata-rata kebutuhan funding dari entrepreneur yang akhirnya bisa di-execute oleh angin itu di 100.000 sampai 200.000 USD. Bisa jadi lebih besar, tapi tentunya akan butuh waktu lebih lama dan tentunya akan ya lebih panjang lah ya prosesnya. Dan angin sendiri memang tidak hanya serving tech enterprise, tapi kita juga working with SMEs yang mungkin bukan tech driven gitu. Jadi penekanannya adalah innovation baik dalam bisnis model maupun produk. Lalu secara sektor memang agnostik. Kenapa? Karena angin kan bukan yang invest, jadi kami kan mobilizing different interest of investors. Jadi ada investor yang melihatnya clean energy, ada investor yang melihatnya food and beverage gitu. Jadi we're trying to cater this diverse interest. Dan di sebelah kanan ini ada beberapa contoh nama-nama companies yang disupport oleh angin, dan salah satunya atau salah duanya itu juga melibatkan Marcel. Nanti mungkin si Fordi juga boleh cerita pengalamannya supporting some entrepreneurs gitu. Nah, setelah memahami tentang posisi angin, jadi kami pun juga mempelajari sebenarnya setiap capital providers itu tentunya punya value add yang beda-beda. Dan ini juga masalah cari jodoh gitu. Jadi investment is like a matchmaking process dan like a marriage sebenarnya kita sebutnya. Nah, apalagi buat teman-teman yang tipe bisnisnya itu a bit niche atau bergerak di tema-tema yang mungkin belum mainstream. Sangat penting buat teman-teman memahami siapa sih sebenarnya yang fit buat kalian. Karena terkadang banyak entrepreneurs yang menyamaratakan semua investor. Oh, saya tech, saya baru bikin startup, saya sebar deck ke semua visi gitu. Padahal visi aja bisa dibagi jadi beberapa breakdown, beberapa kategori. Nah, terus saya social enterprise. Oke, saya mau approach ke impact investor. Pertanyaannya, cocok nggak sih stage kalian sekarang dengan apa yang mereka liatin? Nah, di sini what we're trying to do adalah coba mapping. Oh, siapa sih sebenarnya yang biasanya memberikan modal untuk bisnis di Indonesia? Dan kita bicaranya scope-nya entrepreneurial ya, jadi entrepreneurial business gitu ya. Di sini kami mengidentifikasi ada 12-14 capital providers. Nah, yang disebut capital providers dalam slide ini itu any kind of capital. Jadi bisa dalam bentuk grant, equity, loan. Nah, nanti beda-bedanya gimana, mungkin nanti next panelis juga akan jelaskan. Tapi penekanannya, terkadang tidak semua bisnis mungkin cocok dengan semua tipe investment. Bisa jadi beberapa companies di stage tertentu cocoknya accessing grant dulu atau mungkin belum sampai equity misalnya. Atau ya mungkin memang nggak butuh investor dulu, mungkin mau bootstrapping dulu, and it's okay. Jadi yang saya juga pengen menekankan ke teman-teman, fundraising is not an objective. Jadi fundraising is a strategy, fundraising is a way to achieve the objective. Jadi it's okay kalau memang belum butuh dan tidak perlu fundraising. Jangan sampai fundraising karena ikut-ikutan. Karena mentang-mentang, oh we're the founder yang biasanya founder itu series funding, biasanya dapat capital dari VC. But that's only one way to achieve one objective kan. Bisa jadi caranya dengan cara yang lain. Jadi penekanannya juga di situ. Nah, kembali lagi ke slide ini, setelah kita tahu ada macam-macam capital provider, mungkin di sinilah kita perlu pahami posisi kita di mana dan siapa yang perlu saya approach. Nah, jadi di sini yang perlu dipahami adalah tipe modal seperti apa yang teman-teman butuhkan. Free money, debt, atau equity. Free money itu grant ya, jadi lebih kayak mungkin grant atau mungkin hadiah dari lomba gitu. Jadi tipe modal yang tidak harus ada financial return-nya. Kemudian kalau debt itu tentunya bentuknya utang, jadi pasti ada pengembalian prinsipal ditambah suku bunga, ditambah interest rate. Nah, kalau equity itu adalah instrumen-instrumen yang melibatkan kepemilikan. Tidak semua company cocok dengan semua tipe instrumen, sekali lagi. Jadi, kalau misalnya memang setelah teman-teman pahami kebutuhan investment atau kebutuhan fundraising-nya mungkin bukan untuk sharing kepemilikan, ya berarti mungkin nggak nyari equity. Mungkin yang dibutuhin sebenarnya modal kerja untuk beli raw material, nanti bisa dibalikin lagi, mungkin bentuknya jadinya loan gitu. Jadi itu balik lagi ke kebutuhan masing-masing juga. Nah, di sini dari 14 capital provider kita coba memetakan biasanya tuh mereka di mana sih ngasihnya gitu. Jadi misalnya kalau yang di free money ada tentunya pasti ada NGO yang bisa memberikan grant, kemudian kompetisi dan lomba-lomba itu menurut kami juga salah satu sumber pendanaan yang bisa diakses oleh teman-teman di tahap awal. Kemudian tentunya ada family dan lain-lain. Untuk yang bentuknya debt, ini orang-orang biasanya mikirnya, oh ini bank, tapi sebenarnya di luar bank itu juga banyak capital provider yang instrumennya debt atau mirip debt. Jadi nanti mungkin venture debt, mezzanine, dan lain-lain itu juga termasuk di sini. Dan memang impact investor sekarang juga sudah mulai discussing pakai instrumen gitu. Dan angel investor beberapa juga ada yang memberikan debt. Jadi kembali lagi ke kebutuhannya. Lalu kalau yang equity, ini yang biasanya kalau teman-teman dengar series A, B, C funding, venture capital itu bentuk fundingnya seperti apa, itu biasanya mereka di equity funding. Walaupun misalnya teman-teman dengar instrumennya convertible loan, tapi convertible loan itu adalah instrumen utang yang nantinya berubah menjadi kepemilikan. Jadi tujuan utamanya tetap nantinya mencapai berbagi kepemilikan dalam usahanya. Di sini juga impact investor juga ada yang mainnya di equity funding. Angel investor, terutama di ANGIN, mostly itu looking for equity investment. Nah, setelah kita tahu tipe capital apa yang dibutuhkan, kita masuk ke sekarang stage kita di mana. Karena mungkin saya butuhnya, ternyata saya cuma butuh loan, tapi saya masih awal banget. Nah, susah banget buat company yang masih di tahap awal untuk akses loan, karena kan biasanya dibutuhkan syarat cash flow-nya harus sudah berapa tahun, kemudian bagaimana make sure mereka bisa bayar cicilan dan installment misalnya. Nah, jadi perlu dipahami yang di bawah ini stage kalian ada di mana. Apakah masih di awal ID attraction, ini scope ANGIN nih biasanya dititik-titikin, atau yang sudah lebih besar, yang arahnya memang sudah looking for scale. Nah, selain ada di stage mana, yang perlu diperhatikan juga seberapa besar kebutuhannya. Ini perlu strategik karena ini akan mempengaruhi plan fundraising berikutnya. Karena biasanya fundraising itu bukan one shot activities. Ada tipe-tipe company yang mungkin, fundraising sekarang buat 2 tahun, tapi nanti tahun ketiga saya butuh fundraising lagi. Ada juga yang, saya cuma butuh sekali, selanjutnya saya yakin saya bisa bootstrapping. Jadi ini juga dikembalikan ke kebutuhan masing-masing. Angel investor biasanya ada di range, kalau setiap orangnya ya, setiap angel, itu biasanya di 50.000 sampai 100.000 USD. Jadi mungkin per investor bisa ngasih 500 juta sampai dengan 1 miliar rata-rata. Cuma adalah mungkin special case lebih dari itu, dan dengan kemampuan seperti itu biasanya fundraising amount yang biasanya atau deal size kita sebutnya, yang biasanya di cater itu memang di maksimal di 500.000. Karena kalau lebih dari itu butuh berapa angel gitu kan. Nah, kemudian yang penting terutama buat teman-teman di sini kan punya impact mission ya. Walaupun sekarang lagi happening banget, lagi dibahas banget nih, East Venture sudah mulai ngomongin impact investment. Kemudian Gayo Capital muncul gitu kan, dari idea source mereka punya visi. But the point is, how deep are they looking at your impact? Mungkin mereka aware sebagai opportunity, tapi tidak dalam bentuk measurement-nya. Jadi yang perlu diperhatikan seberapa care sih sebenarnya investor-investor ini terhadap visi dan misi teman-teman. Dan ini bukan berarti yang care artinya benar, yang tidak artinya salah, itu enggak. Ini lebih ke apakah align sama tujuan teman-teman. Bisa jadi teman-teman sebenarnya justru lebih cocok ketemu sama mungkin visi seperti EV, tidak terlalu memikirkan impact mission-nya itu nggak diukur, tapi sebenarnya mereka pushing your business activities gitu. And it's okay nanti ketika kalian growing dan bisa tapping into scale, kemudian ketemu impact investor yang bisa bantu dari sudut pandang impact-nya. Jadi it's all about journey. It's not a one-shot activities sekali lagi. Nah, pertanyaannya di titik ini yang kalian butuh yang seperti apa? Jadi yang horizontal, yang di bawah itu seberapa penting sih impact ini buat investor yang ada di sini. Kami generalisasi, jadi mungkin kalau teman-teman ngobrol ada yang beda-beda dikit, ya mohon maaf. Jadi ini lebih ke how we observe based on our learning. Ketika mereka bilang mereka do not mind, itu bisa jadi artinya mereka agnostik. Ada atau tidak ada impact, it's okay as long as your business traction and performance is aligned with their thesis. Kalau good to have, itu artinya some of them have this lens, tapi bukan jadi deal breaker. Misalnya angel investor ada di tengah ini, karena some angels yang ada di ANGIN itu tertarik dengan isu-isu tertentu. Misalnya mereka sendiri adalah business owner di bidang pertanian. Mereka punya interest di sustainable solution untuk agriculture. So they have this lens, but it doesn't mean kalau nggak ada itu nggak jadi gitu. Dan biasanya kalau good to have ini mereka juga pendekatannya nggak jadi filter gitu ya. Tadi nggak jadi deal breaker dan juga bukan jadi filter, dan mungkin mereka belum sampai mengukur. Jadi belum sampai minimal harus punya impact ke 100.000 low income population gitu. Itu belum sampai situ biasanya. Nah, yang lebih kanan itu adalah yang must have, bahwa impact thesis itu harus terartikulasi dan harus intentional dan harus diukur. Mungkin nanti Marcel can explain more about this must have plans gitu ya, and how does impact investor measure actually. Karena setiap impact investor pun punya spektrumnya. Mereka pun juga sebenarnya ada yang cenderung ke kanan dan ada yang cenderung ke kiri. Ada yang sangat strict dengan framework impact-nya, ada yang cukup loose. Nah, from what I learned dari EVPN Fellowship, ada yang pendekatannya impact framework itu dilakukan bersama-sama dengan entrepreneur saat mereka masuk ke investment-nya. Jadi mungkin sekarang belum bisa achieve, nggak apa-apa, tapi udah tahu ada intensi, mari kita bekerja bersama untuk mencapai itu bareng-bareng. Ada yang pendekatannya kayak gitu. Ada juga yang pendekatannya, saya punya filter ABC, kamu bisa nggak take this list? Kalau nggak bisa, saya nggak bisa invest. Ada yang seperti itu. Jadi balik lagi, sering-sering ngobrol lah dengan calon-calon investor yang nanti teman-teman approach. Dan kemudian selain dari impact levelnya yang ke kanan, ada di yang ke vertikal, aksis itu lebih ke filosofinya tuh seperti apa sih ketika mereka melihat growth, ketika mereka expect financial return. Sekali lagi, kita bicara investment berarti bicara tentang financial return expectation. Nah, ada beda-beda kan interestnya. Ada yang, saya patient, sabar. Investor yang cenderung lebih panjang, cara mainnya mungkin growth-nya bukan yang mainnya trajectory. Tapi yang very agresif, biasanya venture capital ada di sini, mereka yang tipenya, maunya sekian X growth, kemudian tipe fundingnya series funding dan lain-lain. Gitu. Jadi ini sekali lagi di-align dengan kebutuhan company-nya juga. Dan ketika ada yang tidak fit, bukan berarti bisnisnya jelek. Jadi kalau misalnya kadang kita suka ngobrol sama founder-nya, sorry kita nggak bisa bantu nih dari ANGIN. It doesn't mean that the business is bad atau founder-nya kurang oke, tapi lebih kayak we cannot see our angel investor bisa value add ke bisnis kalian, atau it's a different play aja gitu. It's not our play. Mungkin yang lebih cocok adalah visi yang lain misalnya.
Atika, you have 5 minutes to go ya.
Ya. Nah, jadi ini tentang mapping, ini tentang agenda. Ini juga nanti teman-teman perlu pahami ketika ngobrol sama investor, mereka itu cara pandangnya gimana. Financial investor biasanya cenderung lebih, oke, saya ngasih funding, tapi nggak banyak involved dalam operational ataupun strategik. Kalau strategic investor, mereka biasanya punya lebih long term play, dan biasanya ada involvement dalam keputusan-keputusan harian di bisnisnya. Ini juga tipe-tipe growth, nanti saya bisa diskusi ini saat diskusi aja. Mungkin yang quickly adalah tentang angel investornya itu sendiri gitu kan. Bahwa angel investor sekali lagi tetap investor, mereka tetap butuh financial return. Karena sering teman-teman berpikir karena namanya angel jadinya lebih baik gitu. Padahal sebenarnya angel itu artinya lebih karena mereka lebih berani mengambil risiko untuk masuk di tahap yang lebih awal. But still they're an investor, bukan berarti mereka ngasih uang secara cuma-cuma. Nah, profil dari angel investor itu sendiri, itu ada 2 tipe profil yang kami observe dari ANGIN sekarang. Jadi memang yang sebelah kiri itu umumnya angel investor itu biasa high net worth individuals, konglomerat, family business owners. Mungkin contohnya kayak Ibu Cinta Kamdani, Ibu Noni Purnomo, itu kan profil-profil di ANGIN yang cukup notable ya. Kemudian ada Pak Shaun Gozali gitu kan, family business owner. Tapi makin ke sini kami ngelihat ada beberapa profil angel baru, bahwa mereka itu sebenarnya juga entrepreneur, juga tech founder. Kadang mereka ya sebenarnya founder dari certain kayak nama-nama ya misalnya Ahmad Zaki gitu kan. Yang seperti itu profilnya, mereka sudah exit dari previous company dan punya likuiditas, dan mereka mau contribute ke earlier stage business. Jadi ini 2 profil utama. Karakteristik mereka biasanya kemampuannya di secara rupiah 300 juta sampai 1 miliar. Mungkin kalau secara USD ya tadi 20.000, 50.000 sampai 100K USD. Dan biasanya mereka tidak hanya ngasih uang. Jadi biasanya itu muncul sebagai individual personal interest untuk bantuin juga the founder. So usually they will be more open untuk mentorship ataupun knowledge sharing. Nah, ini sedikit hal-hal yang perlu diconsider ketika approaching angel investor, bahwa tentu secara opportunities mungkin mereka lebih accessible dari your internal network, tapi tentunya yang perlu diperhatikan, angel investor is still an outside investor gitu kan, jadi tentunya perlu ada trust yang lebih tinggi, kemudian apakah align dengan your personal vision juga. Yang sebelah kanan, mungkin kita langsung di sini aja challenge-nya apa. Sama macam-macam banget, angel investor itu macam-macam sekali, karena mereka individu. Nggak bisa menyamaratakan interest angel, cara pikir angel, karena mereka, ya it's a personal gitu. Interest angel A dengan angel B, walaupun di deal yang sama, mungkin mereka punya agenda yang berbeda juga. Lalu yang kedua, challenge-nya adalah funding-nya ya small tickets. Jadi kalau ternyata kebutuhan kalian besar, mungkin jadinya butuh banyak angel investor, jadinya cap table-nya penuh gitu kan. Wah, tiba-tiba saya butuh 20 investor dalam cap table saya. Nantinya itu akan repot buat fundraising berikutnya. Nah, kemudian terkadang prosesnya bisa lebih lama karena mereka kan bukan professional investor ya, nggak punya professional investment team, which disinilah peran ANGIN biasanya gitu. Jadi mereka butuh advice, mereka butuh tektokan dengan supporting system untuk decision making mereka. Dan yang tentunya cukup sulit buat teman-teman untuk akses adalah kadang kita nggak tahu angel investor itu siapa. Karena ada beberapa angel investor yang tidak mau openly saying that they're an investor gitu. Karena buat mereka itu akan sulit juga tiba-tiba mereka di-approach random people untuk minta funding gitu kan. So that's why ANGIN hadir untuk membantu sebagai gatekeeper dalam proses-proses ini. Nah, paling ini satu slide terakhir dari saya sebelum kita Q&A. Jadi nanti kita bisa diskusi tentang spesifik matriks atau aspek apa sih yang bisa dilihat. Tapi biasanya ini adalah proses yang kami assess dari sudut pandang angel investor ketika assess fundraising proposal. Jadi tentunya yang pertama kita mau lihat essentials dari bisnisnya. Apakah nanti ada list of questions yang kalian bisa refer, kayaknya kan udah punya contoh pitching deck juga ya. Sebenarnya make sure informasi itu tuh ada gitu di pitch deck-nya. Kemudian artikulasi. Kadang orang pitch deck-nya bagus banget gitu. Tapi ketika kita melakukan one-on-one, founder cannot really articulate what is the business dan juga what is the vision. Kadang terlalu fokus ke problem and solution, tapi kemudian lupa bicara tentang next step mau ngapain dan arahnya tuh mau kemana. Dan ini juga seringkali banyak ditemukan kalau saya ngobrol sama teman-teman yang impact driven startups, karena terlalu fokus untuk menjelaskan the impact side, but then they forgot to mention the business opportunity juga. Bukan berarti bisnis lebih tinggi derajatnya dari impact-nya, tapi what investor want to see adalah the commercial model dan how this will be sustainable. Lalu tentunya proposition-nya, kebutuhan dananya buat apa, buat berapa lama, tipe dananya seperti apa, maunya loan atau equity, itu juga perlu sudah diketahui terlebih dahulu sebelum ngobrol sama investor. Dan yang terakhir, data room ini adalah dokumen-dokumen yang, supporting dokumen yang perlu ada. Biasanya ini nanti ditanya kalau sudah sampai step due diligence gitu kan. Jadi kalian klaim punya revenue sekian, tentu ini adalah PL-nya seperti ini kan, financial statement-nya ada. Tapi kemudian yang bakal ditanya adalah underlying-nya tuh, oh bener nggak sih data kliennya ada, ini klien beneran atau klien pura-pura, atau ini cuma teman-teman keluarga aja gitu. Kadang hal-hal seperti ini juga akan ditanya di step berikutnya. Jadi ini mungkin bisa jadi PR untuk tahap lanjutan. Nah, sekian dari saya, nanti slide ini akan saya share, jadi mudah-mudahan bisa membantu teman-teman juga. Terima kasih.
So hi everyone, I'm Natashia. I'm currently working for a company called Prasetia, like mentioned by Jody earlier. So we'll get deeper into like how VC work and that kind of stuff, but maybe just a little disclosure, Prasetia itself is not a VC yet as of now as well. We're more like an operating company. We are investing on balance sheet. But the more we talk about how VC work, you'll see like how different we actually are in terms of the structure. But yes, we do investing in early stage startups, especially in tech-enabled companies. So continuing what Atika has mentioned earlier with the wonderful presentation. So Atika has shared more on what are some of the alternatives. Each of the investor might have different characteristics, different lives, and that kind of stuff. And today we're talking deeply about venture capitalists. Maybe some of you are more familiar with this one, I don't know, but let's deep dive on it. So how VC work and how to secure funding from them. So first of all, if we want to go deeper about the definition itself, venture capital is basically a typical financing that is very high risk, but at the same time, they are offering an exponential growth, as in the multiplier or the ROI is just very incredibly high. But at the same time, they're also risky, very high risk, I would say. And the goal of the venture capital itself is actually to give a very high return for the venture capital firm, usually in the form of an acquisition or an IPO. So also like there are like several key points here: a very high return, a venture capital firm, an exit via an acquisition or an IPO. So this is definitely a high risk investment. But at the same time, they're looking for exponential growth meaning a very high return, and they can exit through an acquisition or an IPO. So hopefully those four are sort of like the key points of how or what is a venture capital. So the next one is that how does a VC work? So a VC is basically a firm run by a handful of partners, which normally called by general partners or GP. And so if we're asking about, so where the money actually coming from, it's actually not from only, it's not only from the GP side. So VC also raise like the way you guys raise. So the investor for a VC firm is called an LP, or a group of limited partners. So an LP will invest in a VC firm, where the VC firm is basically run by a handful of partners called general partners, or called GP. And the VC fund itself basically has, in normal, have a 10 years life cycle, where they have the opportunity to do the investment in the first 5 to 7 years. And then the rest of the years are basically about giving return. And so, because like what we discussed earlier, VC has to provide a very big outcomes. Why? Because the outcomes, or the exits, the IPO result, the acquisition result, has to basically cover the losses of the high number of valuers that is because like they're high risk. So like the basically the bonus have to be super huge so that it can basically cover the loss. So VC themselves basically know for every 20 investment they make, they will only likely to have like 1 or 2 like winning company. Like will cover like the rest of the value. So that is why we call it very high risk, because if we can imagine 2 out of 20 will be successful, and the rest are maybe not everyone's failing, but some of them are doing so-so, some of them are maybe in zombie mode, so they are no longer thriving, but they are sustaining. So that's kind of stuff. Yeah, that's why VC tend to invest in a few industry, because each VC is run by like particular GP has their own domain expertise. So unlike bank, who normally do talk to like every customers from different industries, but VC has a specific, we call it as a team, or we call it as a like the main industry that we're looking at, just because like we have our own domain expertise, and that is where we know very best that is going to help us to reach our very high ROI. So that's overall about how VC works, how VC is structured. Hopefully this is clear enough. Let's move on to the next one. So if you're talking to a VC and then you hear, so like what Atika mentioned earlier, right? Like you have to also do your homework by understanding what are some of the interesting things from the investor side that they are looking at your company, or when they're assessing the company. You also hear a lot of VC firms saying that we're investing in the founder, or we're investing in the entrepreneur. So what does it actually mean? So because of we are working on a startup, basically we don't really have a lot of prior data sets. We don't really have like a very comprehensive financial statement. That's why the only thing that is going to be our jaminan in investing in startup is basically the entrepreneurs, it's you. So your track record is incredibly important for us as a venture capital in evaluating the deal, whether or not we're going to invest. Especially this is happening in the very early stage startups. Maybe like post Series A, we do have like a lot more data sets for us to, you know, like to assess. But in the beginning side, like Series A and below, basically the entrepreneur track record is the most important thing for us to assess. So how do you basically check this investing in entrepreneur box? Is basically by demonstrating past achievements. Why are you relevant? What was your experience before, and why were you so passionate about, you know, like this project? So basically demonstrating why you are the right person to bring this company into XX numbers, and why you are the right person to bring these companies to give back a very high return for the investors. So basically that's the key. If you sometimes see, because in the previous slide we're talking about VCs are talking to specific industry that they are really good at, but sometimes you also see an investors basically investing in different kind of things. But if we can dig deeper, basically that must be something going on with the founder. So sometimes we're not only looking at the industry that we're very comfortable in, but how, like, who the founder is, and then how well connected they are, how was like the past traction and past experience are also important. That's why if you hear this line so often, we're investing in the founder, we're investing in entrepreneurs, that's because like early stage VC tend to believe strongly in the entrepreneurs. So like the hint is that since we assess you the most, if we like you and your idea is just okay, there might be a deal. But if it's the otherwise, if the idea is amazing, but then you're not someone that we know previously or non-relevant experience, sometimes it's a lot harder. I'm not going to say that it's like that, like what I wrote here, but basically it will be like a lot harder for you to basically convince the investors. So the next one is that, so this is quite similar to what Atika has mentioned earlier. So because like investors investing in entrepreneurs, right? But it doesn't mean that investors are the one who have, like basically the final call. But you as an entrepreneur also have the final call. You also have the right to basically consider which thesis or with investors is basically the right fit for me. Because like Atika mentioned earlier, it's basically like a marriage, or maybe in relationship kind of stuff. That's very true, because in building the business, basically you want a long-term partner, right? So here are like several stuff that you might want to think about in finding the right investor partner for you. So first of all, you might want to see like what kind of companies that the VCs are investing in. Is there any competing companies, or turns out the VCs are investing in like competing companies because they just like that industry so much. So think about that. If that is something that you are comfortable with, then you can go. But if not, then you should next on, like go to the next investor. So they kind of stuff. So really pay attention to what kind of investment that they've done before, because sometimes VC doesn't really invest in similar or competing startups anyway. So just don't waste your time and be careful with your data as well. The second one is that you might also want to check what stage of funding that they normally do. So if you're early, don't try to talk to those who are investing in the Series B, Series A above. You might want to make it as, oh, this might be like a good time for us to build a relationship, but you're just too early. It's not really relevant, and it might drain your energy as well. Last but not least, you might want to assess, does your long-term vision for your startup match the long-term vision of the VC? This is exactly like what Atika mentioned earlier. Sometimes VCs, especially VCs, they really want to have a very quick exit with an exponential growth. So if you are in a business where you value, like impact more perhaps, or maybe like other stuff, you value other stuff more than the high return kind of like quick exit kind of stuff, maybe that's not the right fit for you. So maybe like for this last question, you can try to talk to them first to get a feel. If like the first one and the second one check, then when you meet the VC, try to like dig deeper on this side as well. Okay, the next one is that we'll talk about when is the best time to raise. So there's no such a thing as like right or wrong, I guess. But I guess it would be an ideal time for you to raise when you have figured out what the market opportunity is, who your customer is, and when you have delivered a product that makes so basically trying to find a product market fit, and then there's that tipping point where you know that this is going to explode. So that is like some of the things that you might want to figure out before you're starting to raise some money. When we're talking about market opportunity, like we mentioned early in the slide, is that VC tends to like something exponentially grow. So if your business is in a typical business where you probably have the opportunity to experience high exponential growth, then might be your chance. For example, if you're a SaaS business, for example, and then like one of Prasetia's portfolio Bukukas, they do sort of like accounting. I don't really see it accounting stuff, but they're enabling SME retailers to basically do all the accounting stuff in the app for free. And then their growth has been tremendously interesting. They've been grown from word of mouth, so digital marketing and growth, word of mouth mostly. And then the market is definitely huge. They're targeting MSME, and then they're very traditional. They're targeting tier 2 to 3 cities, so they're no longer competing in Jakarta area or like other big cities who have like enough player to plot with. So like the market opportunity for Bukas is definitely yes. They know who the customer is. Yes, retailers, MSME, tier 2 to city, and then they like when they started they started fundraising, and then they're fundraising quite quick. They've been finishing several rounds until today. Although they're I guess like less than 2 years old, but definitely when they're raising, the founder can share with the investors that there's this hockey stick kind of growth. So that is, if you take all of these three aspects, that is when you're ready to raise.
Natashia, you have three more minutes to go, yeah?
Okay. And then if we're talking about how rapid is interesting, a rate of 10% per week might be impressive, but it really depends on the sector or industry that you're in. So basically, all you need to do is that to impress the potential investors that you're talking to. So how much to raise? This is quite theoretical. I can share later the presentation, so that let's just skip this one. This is also quite technical. You might want to read this later. Okay. This is also quite technical. So yeah, if we're talking about financing options from VCs, right? There are three types of investment options. The first one is being called as Convertible Notes. Basically, this is some kind of like loan, kayak pinjaman. There's so the items is that a principal amount, there's interest rate, and then there's maturity date. The intention of this note is not for you to repay back, but basically to convert that into equity. Jadi, so this convertible notes is making it's a little bit simpler because we don't really have to fight over what's the valuation cap and what's the valuation target valuation, that kind of stuff. So just do like a valuation cap or a discount. So for the investor side, it will be easier as well because they don't really have to fight over the valuation. And then it's sort of like a loan kind of instrument so that it can be faster in a way. So convertible notes is basically the same with SAFE. SAFE is normally used by YC companies, but in SAFE, you don't do like interest rate, you don't do maturity date, you don't do repayment requirement. So basically all you need to negotiate only the amount, the cap, and discount if any. The latest round is basically the equity round. So equity is a little bit harder because we need to define what's the valuation, define what's the price per share. And this can be a time-consuming and expensive way as well, especially if you're if you're an early stage companies, because you need to hire lawyer and then you need to change your acta, that kind of stuff. So yourself, anything there's nothing wrong or right about this as well. So yeah, like any of them might be suitable for you, then you can take the option. This is what to prepare. Basically, you can find this anywhere. Okay, some hints. So if you're pitching to a investor or if you're pitching to a VC, especially think of a massive outcome, something like billion, and how you can get there in a very short period of time. That is what is called as a tech startups. So if you can't really take this, the first line, then maybe it will be a little bit harder for you to go to a VC. And if you are take that, like high growth and then very huge market size, you may want to always look for a smart, warm introduction rather than do a cold call. And what if we can find any connections? And what you can do is basically look for any connection that might be affiliated to the VC, be it like the portfolio companies, or maybe, I don't know, like try to be creative on this one. But warm intro has always been the best. And yeah, I think like this is some of the questions that I think that we all should think about. Is your company basically really a startup, or is it basically a small business? Because VCs are interested in exponential growth. And if that's not what you're offering, it might be good for you to consider other funding resources. And Marcel will talk more about that. So yeah, thank you so much. That's all from my side.
So thanks for the introduction, and also great to hear what I was studying, because sometimes it feels that that's been a long time ago. Yeah, so I'm Marcel. I'm working with the Capital for Development Partners. We're an impact investor. I'm based here in Jakarta, and we are a Netherlands-based impact investor. Although our teams are really here in Indonesia and in India. Those are the two countries that we cover. And as an impact investor, Atika already mentioned a bit about it. What we do is we finance basically growth companies. I will get later a bit more into detail on what kind of stages we invest in, or finance basically as a debt provider. But what we're always looking for is companies that have a very intentional impact on the communities they operate in, or the economic system that they operate in. The way we define it is that companies intentionally have a positive impact on underserved communities. We take that fairly broad. So this could be rural communities, but this could also be consumer groups that are, let's say, underserved by the traditional more commercial markets. Yeah, and our investors are aligned to that. So we also manage a fund. So we have investors. It's a bit similar to what Natashia was saying, is that we are a general partner, we are a fund manager, and we have LPs, investors, that have the ambition to support growth companies and at the same time make a financial return and a social return through these SMEs. We also, apart from, let's say, the impact angle on underserved communities, we are also an active gender lens investor. I think for all of you, that's probably interesting to keep in mind. There's a growing movement in globally basically, but also strongly in Indonesia, where impact investors, besides let's say the traditional impact that they're looking for, also focus on more inclusive economies, and that means also more attention for gender balance, creating inclusive companies, having diversified teams. So as you build your company, your management teams, or even your staff, it's good to take this into consideration, not just because of fundraising purposes, but also to ensure that you build companies that really unlock, let's say, the potential that you see when you have diverse teams. So one of the things, or one of the ways we are committed to this topic is that as a fund, we've dedicated, or we've committed to invest at least 30% of our capital into women-owned or women-led businesses. And the moment we did that, we actively reached out into the market to let's say source deals in that area. And currently we are around 60% of our portfolio that's been invested in the women SMEs. Just also a bit of a background, we work in two regions. One is India, one is in Indonesia. Within the fund, we have a hybrid strategy. In India, we do equity investments. So we're not really a venture capital company, but we do, let's say, support ventures that are pre-Series A, Series A going up. In Indonesia, we have quite a different strategy. We finance through what we call mezzanine structures, mezzanine debt or hybrid debt, different ways of defining it. But it's primarily through loans, and I will in a bit I will talk more about what that actually means. As a let's say focus on Indonesia as a lender, we don't act like a bank. So it's not that we look at, let's say, your assets and assess the value of your assets and then provide a loan against that. Similar to VCs, we also and a lot of other investors, we really look at teams. What are the capacity of the teams to grow the business? We act as a partner, really, even though there's a, let's say, a lender-borrower contract. The way we do it is by actively trying to support the businesses, try to unlock the knowledge that we have as a team, also try to support them in fundraising when there's equity runs, and we have a portfolio support program, which is a separate grant program that we can provide to our portfolio companies to support them on topics that are a bit difficult to really finance from, let's say, the business model itself or the business operations. So this could be, let's say, market feasibility studies. Very often it's around improving the financial systems, which is often one of the challenges to really go through the different stages of your growth. So there's different ways that we support our portfolio companies. Just a snapshot. Like I said, we're focusing on India and Indonesia, but we have a few portfolio companies in Philippines and Cambodia and Nepal as well. But currently we are deploying, let's say, our funds into Indonesia and India. Sector-wise, it's agriculture, healthcare, education, renewable energy. So we don't have a very strong sector focus. It's always the impact angle that we look for, and then the SME in itself is the common denominator. So as I said, these are the sectors that we focus on. This is a snapshot of our team. The team in Indonesia, 3 people: investment manager John and Gisela, an analyst, and myself, and then the team in India. So we're pretty lean and mean operations in terms of managing our fund. Then maybe. What I realize is that today most of you participants, you are at let's say fairly early stage. Some of you are even pre-market or pre-revenue. So in that sense, it's let's say a bit tricky to really talk about debt instruments, because there's one thing that's important for a debt provider is to be able to assess, let's say, your cash flows. But I think it's still valuable to you to kind of understand the difference between a bank loan, let's say a mezzanine structure, and an equity or venture capital provider. Even though that may not be, debt finance may not be opportune at this moment. I'm sure you all have great plans and you want to grow and go through multiple rounds of fundraising. So I think it's good to have a holistic view of what is available. And I'll focus on the debt component. I think Atika did a great job in describing the entire ecosystem. Yeah, as you see here, I've plotted basically 3 instruments: a traditional bank loan, then mezzanine or hybrid debt, and then equity. Usually with the bank, a bank doesn't really look at, let's say, the business model, the team, etc. Obviously, they do look at it, but the main, let's say, risk assessment that they do is basically on the assets and how can they finance against those assets, sometimes against the cash flows, but most of the time against assets. They have a return view, which is really based around interest. So interest payments and principal repayments. Often there's monthly installments. That means it's very important that you have cash flow that you can make available to actually make those payments. And banks are usually at the very not usually, they're always at a distance from your business operations. They don't have any controlling influence, and they also usually don't offer a lot of expertise to your team. Now, moving over to the other side, for venture capital and equity, that's the opposite, obviously. So they have a lot of influence for a positive reason. So they are part of your cap table, they're part of your business, and they have an interest now in making it into a success. They offer expertise. They don't really have collateral. They're an equity investor. And their returns are really made from an exit. And Natashia also explained it, that the portfolio buildup of an equity fund is around 10 to 15 companies, of which 1 or 2 are doing really well, and the rest are not really providing the returns. If you look at the portfolio of a bank, it's different. It's a lot of, let's say, smaller tickets that are provided by the bank, and they really want to manage their portfolio risk. If 1 or 2 or a certain percentage defaults, still fine, because they have hundreds or thousands of other customers against that. Now then you have the mezzanine finance, what we call hybrid debt, which is sitting there in between. And that's also what we provide. Our returns are driven by the cash flow of a business, not so much against assets. We do look at collateral, but we're flexible around it. And most of the hybrid debt or mezzanine debt providers are very flexible around collateral. That means that we don't really have, let's say, controlling power, because we don't sit on the cap table, and we're not a shareholder. Sometimes we try to have a observatory seat in the board, not so much from a controlling point of view, but to be close to the developments and also be able to actually offer our expertise in a valuable way. You're close to the action, you know what's happening, and you can also contribute. But that's on a case-to-case basis. It's not something we always do. Yeah, and returns are for us IRR driven. So that basically means we often get the question, what's your interest rate? And that's always difficult for us to answer. If you consider that the bank is usually between 8 to 12%, depending on the strength of the collateral, and venture capital equity is 25, 30% upwards, no collateral. We sit somewhere in between. But what we do is we try to assess the cash flow and determine a rate of return that we can potentially make from providing companies with a loan. So sometimes we do it, just to give an example, we, instead of doing an interest, we charge a revenue share, and then we agree with the company on a certain return on investment. So if we provide you today 100, we say, okay, we want to have 100, I'm just giving you a figure, 140 returned. Now, how that return is made, or not how, but when the returns are made, are depending on your performance of your business. So we charge a revenue share, and if your revenue outperforms, let's say, your projections, then the repayment is done faster, which is positive for the internal rate of return. Just to, for those that are not so familiar with these concepts, internal rate of return takes into account time value of money. So the sooner you get, let's say, this 150 returned over the 100 that was borrowed, the higher your IRR is. But in absolute terms, you kind of fix, let's say, the returns on this instrument. Yeah, this is just how we structure it. It must be said that specifically when it comes to cash flow, a lot of early stage companies cannot provide, let's say, stable cash flows or cash flows that can convince us as a lender that they will really be achieved. Because most of the time, the focus is really on growth, building teams, investing in technology, things like that. There's nothing wrong with it. But if you're at that stage and you're not, let's say, bringing a product to market or a service to market that's actually bringing in strong cash flow, debt is a difficult instrument to really deploy, because ultimately it's uncertain if the business will generate enough money to make the repayments. There are, okay, I'm a little bit ahead of my sheets. Let's move to this sheet. Yeah, so just a few things. It's not exhaustive, but the startup DNA is at early stages. A positive cash flow is not really a key objective, as I said. Most of the time, the focus is really on growth. I guess it also depends on what you choose as a founder. If you're in a segment of the market where or in a market space that is huge and the numbers are really important, and obviously you are there to grow fast and even exponentially, and have less focus on creating cash flow or even getting to break-even points or EBITDA positive levels. That's not your objective. You fit yourself into the ecosystem of the venture capitalist, and your objective is not to fundraise, as Natashia said, but your objective is to use, let's say, the different type of money available to achieve that growth. But I've seen some of the decks from you all. Some of these businesses are not really in that space. So I think you should consider whether chasing, let's say, venture capital is the wisest thing, or whether you should look for different routes. And different routes could be that you, at this point in time, bootstrap yourself, or get you even have soft loans available from foundations, family funds, specifically for impact-driven companies. And then, bring yourself to a level where you can actually demonstrate significant cash flow and strong cash flow. And based on that, reach out to lenders. Because that's ultimately a key driver for any lender, also venture debt providers or mezzanine debt providers. So moving over to the different type of debt, there's the traditional loans, which is basically coming from banks. I already spoke about that. You also have the convertible loans. I don't really consider them as debt. Natashia and also Atika were mentioning it. It's more like an equity. It's basically, it's a loan. It could be an interest component. Most of the time, the interest is accumulated. And ultimately, the objective of the investor is to basically push out the valuation until a bigger round happens, or until the business can actually be valuated. But ultimately, the idea is to hold equity. So then there's two remaining. Some of you may have heard that I think over the last year and a half, maybe 2 years, but I guess only a year and a half, venture debt, kind of venture capital type of venture debt is becoming more popular. We have a couple of players that have moved also into Indonesia, which is super interesting because these are players that are very much aligned to venture capital providers. So they usually, again, they don't really go to early stage. They usually sit at, let's say, Series B and beyond. And what they want to do is so basically they provide a loan. They have an interest component on that loan. So that loan needs to pay its interest and needs to pay its principal. And then they attach what they call a warrant. I won't go into the details, but that warrant is basically the right to purchase equity. They don't have that warrant to actually become a shareholder. They have that warrant to, if the company really achieves the growth, to ultimately sell that off at a premium, obviously. So it's kind of an equity kicker. So they have the loan, they have the principal and interest, and then they build up a similar kind of portfolio as venture capital providers do. And then some of these companies in their portfolio will have a very valuable warrant. Those companies that make an IPO or go through bigger rounds, etc. Again, I think that's interesting for all of you to track. Again, where you're standing today, that's early stage, but the objective is also to give you a picture of what is available, and you always have to look at the horizon, which is far away, to make sure that you put yourself on the right track. And then there's the performance-based loans. yeah, those are, I have not seen a lot of providers bringing in these kind of loans, called mezzanine loan or hybrid loans. So it's a bit of the description that I gave you previously, what we do. So that could be a revenue share loan. It could also be a loan that, let's say, based on milestones you achieve, a certain a premium, certain extra payment is made on the principal repayment. But typically the idea of these performance-based loans is that instead of fixing, let's say, interest and principal repayments, the idea is to link it and align it to your cash flow. So if your cash flow is good, you pay high. If your cash flow goes low, you pay less. But ultimately, it's a loan, and that's the idea of any debt instrument. Ultimately, it's a loan, so there's a contractual arrangement, and yeah, loans need to be serviced. So you always have to remember that if you take out debt, yeah, you need to be certain that, or close to certain, that you can actually service that loan. Now, some of the advantages of debt is typically it's lower. It may feel as more expensive than equity because you actually have to make regular payments, but obviously it's a lower cost because ultimately, if your business performs well, the value you provide for equity holders and yourself as founder is typically much higher than let's say this 10 to 20% range of cost to debt, or cost to hybrid debt. I've written here faster process. I'm not even convinced myself that that's always the case. I think one of the challenges that we really see in providing loans in general is that companies need to have strong financial systems, because we do need to basically go into the systems, go into the accounting systems, talk with the finance persons to understand how strong those cash flows are and how the projections, how they are, let's say, matching with reality. So that database needs to be there, and quite often, as an early stage company or early stage founder, this does not have your priority logically. So going out to a debt provider also means that, yeah, that kind of needs to be in place. Otherwise, it's challenging for a debt provider to even assess your business. Unlike, let's say, venture capital providers that are much more, let's say, looking at who you are as a founder, how you can deliver on promises, and accepting that at the later stage, these kind of core business principles get into place. For a debt provider, that's already important the moment we assess. Another advantage is reduction or reduced dilution. Obviously, you give up less equity, which is for you at an early stage when your company is, the value of your company is relatively low. Let's say today your company is valued at $1 million US, and you raise $500,000 US. You give up a little bit less, 40 to 50% of your equity. If you can push that out and your company becomes 5 to 10 million worth, and you raise money, your dilution is obviously less. So it's also important to always kind of see if you can find a mix between raising debt and equity. But again, that's not so easy at an early stage. Yeah, and then the last
Marcel,
point.
You have 2 minutes to go, yeah?
Okay, so I'm at the end, more or less. Another advantage is to extend your runway for next round. So if you are going, let's say, through these multiple equity rounds, and that's what you typically see with the venture debt providers that are now in the market. It's a good way for founders to raise debt and push that next fundraising round a little bit further out, and hike up the valuation of the company, so that when you actually do that next round, your dilution again is less. Just one thing that I skipped, but I realized I still have a minute remaining, and this is probably interesting for you out there that, let's say, feel that you have strong cash flows and you actually have a proven model, and you're at a stage that you want to scale up, maybe not exponentially, but significantly, and your cash flow is strong enough to be looking into raising some debt. What we also do is then, I was talking about this portfolio support program that we have. We also do something which is pre-investment, which is basically helping those companies that we feel have a good potential to get a loan from us, but then are lacking, let's say, the financial reporting systems and forecasting abilities. So there we can provide, it's not a lot, but we provide some TA money to, let's say, bring in a financial advisor or even an accountant, really, to get your systems in place, and also do a check on your numbers to verify whether, yeah, your numbers are correct. Sometimes it's also around legal and governance challenges, and those that we can do at the pre-investment stage. What we typically do is that is really a grant, and then if the investment is ultimately made, we expect that grant is being returned, because it's coming from a pool of funding that we want to sort of revolve, so we can help as many companies inside and outside our portfolio as possible. Yeah, I believe that's what I wanted to share. I hope it gives you a bit of a picture, not so much on the landscape, but more on the debt instrument and how it can be of benefit to SMEs. Thank you very much. And if you have any questions, I think we have a round of Q&A after this.